Happy to have with me here today someone with 50 years of experience on Wall Street. We have Mason Sexton. He is the head of New Paradigm Research. It's good to see you.
Thank you, Trish. It's an honor to be on your show.
Well, I'm happy you're here because we got a lot going on in these markets right now, and people are getting worried. We've seen the Bud Light fiasco. Everybody's very entertained by that one. The stock has just fallen off a cliff. But I know you're looking at things from the macro perspective you have, and given your background, where you're sort of helping hedge funds to time the market, so to speak, if that could really be done. They tell us it can't be done, but I know that you've had a lot of success, including just last year, up 38% when the S&P was down 22. So good stuff. How are you thinking about what's going on right now and all the headwinds, Mason, given that, well, we're going into an election year, and I don't know if the Fed's going to be able to cut rates anymore, and we got inflation that's 4.9% and not quitting. What's your take?
Well, I'm concerned for the average investor that we're entering an unprecedented period of disruption, and it's going to have a long-term impact. I think the first thing you look at is obviously the failure of these regional banks, starting with Silicon Valley Bank and so on, Signature. That is just the tip of the iceberg, if I'm correct. So you're going to have regional banks continuing to fail. It's going to reach a crisis, I believe, over the next couple of years, and this is going to have a devastating impact on the economy because regional banks are responsible for about 70% of the financing of small business in this country, and so we have a recession directly ahead of us that should be obvious by no later than the end of the third quarter or the beginning of the fourth quarter.
I mean, even if the Fed says, hey, we're going to backstop everything, don't worry, we'll take it over, which is what they've sort of told us, and they'll print more money, I guess.
That in my opinion,
so?
The Fed isn't going to do anything but continue to raise rates because they know that if inflation gets out of control, the whole game is over. So, that combined with the already high indebtedness of this country, the worry about our currency being a reserve currency in the future, and being attacked now on a regular basis by China and other countries like Brazil now and Russia. These are really serious issues, and the one thing the Fed knows is that if they have a shred of credibility, they're going to have to fight inflation. So they're gonna drive, in my opinion, the car right off the cliff in terms of the economy.
You get someone else that wants to drive the car off the cliff right now, and that would be Washington, D.C., because they're talking about default. I don't think it's going to happen, but they enjoy the political brinkmanship, which I find highly irresponsible. But nonetheless, what's your take on this whole default?
It's going to go right to the last second, literally. They're going to take it right to the edge of the cliff. I don't know whether it'll go off the cliff or not, to be honest with you.
Better
but
not.
I tell you, I can assure you, it's going to be a crisis atmosphere here. They're going to take it right to the edge. So,
and that's highly irresponsible. And I say this is why we need people that actually have a business background in Washington, because they know how to get deals done. These politicians just don't. They use these events. Speaking of using events, using things, I'm looking at this role of environmental social governance right now in people's portfolios. A lot of Americans are rightly worried because there's one company that kind of controls a lot of union money, a lot of retirement funds for teachers, for firefighters. And BlackRock is very keen on their ESG requirements, and they're kind of dictating the rules there. But let me just ask you, in your career as an investor, if you're advising someone on, you want to be here, you don't want to be there, how does ESG play into it? Because if you ask me, there have been opportunities specifically in the energy sector that may not have gelled with what the ESG agenda was. So people are losing the chance to make money.
Yeah, well, look, obviously, I have had a long career. This ESG thing is a relatively recent phenomena. It makes no sense to me because the most efficient allocator of capital is the capital market. And so you don't, the last thing you want is government intervention. And a lot of this ESG stuff is going to come a cropper because they just don't have very smart people in the government, and they don't do very good job of planning. And
I know.
finally, you know, we're, I call it Murphy's Law. I wrote a piece which will be available, I believe, if you give people the URL, that
We
talks
will.
about we are running out of luck as a country. We've been very lucky, primarily because we've had our currency has been the reserve currency for the world. So we've been
Mhm.
able to borrow at very low rates and borrow money from other countries that have had surplus. But that's all changing. And right now, we're facing a period here the next couple of years of extreme difficulty in a lot of ways. So it's what I call Murphy's Law and O'Toole's corollary.
Mhm.
And the O'Toole's corollary is Murphy was an optimist. So I don't
So,
mean to be too
all these
bearish.
difficult things. I mean, you get a messed up political system, right? Where everybody's trying to use everything they can possibly think of. We have Joe Biden really kind of stoking some of this racial tension there over the weekend. And I don't think that's healthy for the country. You've got that going on. You get the ESG nonsense, frankly, that's going on. And you've got a spendthrift environment where apparently, there's just no end to this money printing. You say the Fed is going to cut rates. I don't know. I mean, I'll believe it when I see it. I feel like
They're
they
going to
just
tighten. They're
can't.
not going to. Yeah, they're going to
Yeah,
tighten.
and by the way, even if they do, hello, it's 31.4 trillion in debt that we have. So knowing that China, Russia, Brazil, anybody that can wants to come in and take over as the hegemonic power of the world, I don't think they're going to do it tomorrow. But, hey, if you're trying to plan for the next 10, 20, 30 years, what do you think people need to be taking into consideration? What are you telling them? I mean, everybody says, okay, invest in the market and don't worry about it. Just put your money into your 401k every single week, and you'll be fine. Yeah, you'll be fine unless you just happen to want to retire when the bottom falls out from under,
Exactly.
right?
Yeah.
So I
So
don't necessarily love that advice.
yeah, I think the closest analogy is the 1972 to 1982 period, where the Dow basically didn't advance at all over 10
Mhm.
years. And then when you take into account the high inflation during that period, basically people lost 50% of their wealth over that period. I think that's the optimistic case for
Mhm.
what we're facing. I really do. So the way to make money is you have to short or sell things at the right price at the right time, cover them, and you have to be very nimble, and you have to diversify your asset categories. I think gold is appropriate. Probably one of the larger gold allocations in recent history would be 10, 15, 20% of your portfolio.
Wow.
I think you have to have a big cash component. And I think
Even though cash is losing money?
well, it doesn't matter. It's an opportunistic
Okay.
situation. In other words, you want to have a 25, 30% cash uh, portion so you can take advantage of opportunity.
Mm-hmm.
The Stanley Druckenmiller calls it the waiting for the fat pitch, and that's what we do at New Paradigm Research. We're taking all the forces and influences that we study and monitor
Mm-hmm.
and making timing decisions which enhance people's return. And that's what we did last year when we were up 38%, and that's what we're going to continue to do.
Well, I know people can get your research. Actually, you're going retail, so to speak. You've done a lot of institutional work in the past, and everyday folks can get it at Great Disruption 2023, greatdisruption2023.com. We have been talking with Mason Sexton. He is the founder of New Paradigm Research. Any big thoughts you can leave us with? I mean, again, as we consider sort of the cultural shift that's going on right now, as we consider this massive amount of money printing that's happened. I know you're worried, and I know you're telling people be very nimble, be very careful, and stay flexible. But why is it going to be that bad?
Well, I mean, if you look at artificial intelligence, which as just one category of this transformation, and clearly it's going to have a huge impact on the economy and on culture and people's jobs. There's also a very dark side to that. For example, how it can be used by criminals to more nimbly steal your identity,
Mm-hmm.
uh, the propaganda that is going to be generated and directed at people in a way that has never happened in history, to impact elections, for example. These are big, big themes, and they're not all going to be, good for the country or for individuals. So you have to prepare yourself for these changes. Make sure that you've got plenty of money stashed away for a rainy day, and try to take advantage of the opportunities as they present themselves, because that's the old buy and hold is gone. Trust me, that will not work in the 5 to 10 years that we're facing, in my opinion.
Well, we appreciate all your insight. We'll have to have you back to talk about some of this AI stuff. I wholeheartedly agree with you, and I think there's going to be a lot of winners and losers in that space. So, Mason Sexton, founder of New Paradigm Research, thank you so much for your time today.
Thank you, Trish.